everyone. I hope you're doing well today, and I hope you've been enjoying the video so far. So our topic for today is going to be stock chart construction. Now we're just going to talk about the main ones: the line chart, bar chart, and candle stick. So these are the three I'm going to talk about today. And I'll firstly say that let me adjust my candles back to the normal one, how it's supposed to be, because neutrally it's going to be green, and then the selling candle is going to be red. Like this is how we used to have it on a normal day. It's all green and red. So because these candles that you're seeing now, they are the communication in the market. They are all communication, but I don't want to just say candles is the only thing people use or that we use in the forex market. So I'll just say this: whatever chart that you see, whatever charts, because this is all chart construction, whatever chart construction that you see on your trading view this is trading view. Okay, this trading view, this whole thing is trading view. So whatever chart construction that you see is dealing with the communication in the market, because it is all within buyers and the sellers. Chart is formed by the communication within the buyers and the sellers, right? So like no matter these charts form the type that you're seeing, is all within the buyers and the seller, because we are buying and we are selling in the market. So it's either someone is buying or someone is selling. If you go to the market and there is no one to sell for you, there is no way you can buy. There is no way you can buy. There is no way. And if there is a seller as well, if there's not going to be any buyer to buy from them, then there's no way out as well. So here, let's firstly start with the line chart. Okay, this is the line chart. If you click here on your trading view and click line, you can see it all. It's all lines. You know, see this line chart. It is very, very important to know the usefulness of it. Yes, it is very important that you know how it is working, how it is moving, how it can really help you. Yes, you really need to understand this. You really need to know what it is all about, the line chart, I mean. Okay, so now, because this is telling you about the price, but it is being merged together, both the buyers and the seller. You can see here, just keep going up. You can't really identify when it comes down, like the segment you can't really know. It's not actually like available here. You don't really know how it works. You don't get to understand it, right? So now it tells you the movement in the market, the price movement in the market, in the simplest form that you need to know it. So let me just write it out as this: line chart helps you to know the simplest form of price movement in the market. It allows you to know it. What are the movements? How is the price going so far? What are the things happening? That's the form of the line. That's the works of the line chart. And now, by the time we get to using this line chart as a technical analysis, remember, technical analysis deals with the price action. The last video talks about that. So when we start getting into that, you are going to know the essentiality of this line chart. Okay, it's going to help you a lot to understand the line chart. So just know that one of the chart view that you can use for trading or for analyzing the market is the line chart. So let's go to the next one, because in this video we are going to have more than one topic, maybe like 3 topics. So the second one, bar charts. Okay, this is actually being used by some traders, because as we understand that it's either buying or selling. That's just the two that we have, right? The price do what here? Opens here, and then close here. That means that when these sellers are selling, these sellers sold all the way down here. You know, sellers, these sellers, the red candle identify the sellers, right? So now they sold all the way down here. So let me just put it like this. Sellers sold all the way here, right? They stood there. Now buyers started buying again. Then buyer came in. Bought up. They bought back up. They pushed the price back up, right? And now they bought to this place. They bought to this exact price here. Let me widen it. And then sellers started selling again. They sold from the last price. You know, since the buyer started buying from here, they bought to this extent. Now sellers sold back a bit. Then the price closed here. And then they took another selling trade again, because they started buying up till this extent, then they sold back. So let's use this as an example. Buyers have been buying, sold back, another price, sold back, still bought back up. Then the seller sold again. The price continued, sold a bit, they still bought up, and then again bought up, like the climax here. They bought this climax, then the seller started selling again. Buyer still bought a bit, then they still start selling. I hope you can understand now. It is all about the buyers and the sellers in the market. So this is about that for the bar chart. And then let's go to candle. This is the most essential. I'm actually going to take you through these ones too, but we don't really need them. Yes, this is a candle. Exactly. You can really understand this now. I just have to take you through that one. We see here now, this is what has been happening in the market before. The market has been buying. The market bought to this extent. When the market got here, they were buying. Then the seller did what? Sold it back. Price opened another position here. I'm going to label what this candle is when we get to candlestick, because candlestick is a whole topic on its own. So I'm not going to start labeling here. So when it gets here, they sold back here, another price opened, buyers bought up, then they still sold again. Buyers started buying again from here. That's why you see this wick. We call this wick. This long thing is called wick. Let me just label it. We call it wick. It actually wick down. We call it wick, but what happened right now is that it's wick down, right? And this actually wick up, because the wick is up. Wick up, wick down, and wick up. isn't it? So that is how it is. Now, there was a week down, buyers bought back again. Price opened here. Price opened here. And then they sold again till this extent. It has been a selling. It has been selling. After they sold from here, after they bought to here, they sold back down to this extent, causing a very long week in the market. But let me tell you one thing. This is actually caused by a fundamental analysis. But we are not going there for now. But I actually taught us about the fundamental analysis. There is a reason. There is volume, momentum, volatility in the market during this time. So buyers bought back again to this extent. So candles, candlestick is the communication, just simple communication within the buyers and the sellers. Each candles have the reason why they are formed. It has the reason why it has been happening. It has the reason why we are seeing it formed this way, because the buyer did something and the sellers are actually doing something as well. It is all within the buyers and the sellers. They are actually having a communication in the market. Are you getting what I'm saying now? So let's come here. Let's come here again. Market has been buying. Let me just use here. Market has been buying from here, right? Okay, let me started buying from here, right? It bought up to this extent. Seller sold. They bought back again. Buying climax, and then the seller sold again. They sold all the way from up till down. Can you see that? They sold all the way from up to down. So that's the communication that the market is no more buying, no, the market is selling. But meanwhile, don't forget, you can actually change the color of this candle to whatever you like. Just double click. Yeah, I actually like it this way, this color as my buying color. So it doesn't matter whatever color you give to it, as far as you know that the one that goes up is the buying candle and the one that goes down is the selling candle. So I like this to be black. Like always, I always like it to be black. You see, it still doesn't change the fact that this is a buying candle and the black is a selling candle. Okay, so it doesn't change the fact that this is a buying and this is a selling candle. So now the second topic that I want us to do today is how to read stock charts, because it's a very simple topic, so I don't want to make a new video for it on its own. So whatever kind of trader that you are, long term, short term, intraday, swing trader, trend trading trader, I don't know, whatever kind of trader that you are going to need these simple things. The time, these are the time frames. These are the time frames. You are going to need this. You are going to need this to read your market, starting from monthly time frame to weekly. This is weekly time frame. Weekly time frame, daily time frame, 4 hours, 2 hours, 1 hour, 30 minutes, 15 minutes, 5 minutes. So when you see them representing it as weekly TF, that's weekly time frame. If you see they say DTF, let me just put a capital letter. Let me put this one. This is not WTF that you know. This is just weekly time frame, please. So then this daily time frame. We have 4H. That's what? 4 hours time frame. We have 2H. Let me just go to 1H straight. 1HTF. That's 1 hour. And so on as that. So this one 30 minutes, 5 minutes. Okay, now let me tell you. On this present trading view, my candles, each of them are representing 15 minutes time frame. So now let's say that now this whole candle, the whole candle now is just 15 minutes. This whole candle is 15 minutes. This whole candle is 15-minute time frame. So the to form this candle takes 15 minutes. And if you check the right side of my where my price is, you can see a countdown. The countdown is what is signifying to me the time remaining for this candle to be formed. This candle is still forming. You see, it remains 10 minutes 34 seconds. Now, to form, the buyers are still buying, they are still buying, they are still buying. Are you getting me now? So, this whole candle is formed by 15 minutes. So, let me click 30 minutes time frame. On 30-minute time frame, you can see that we are no more seeing these small ones because this is formed within 30 minutes. It still remains 10 minutes to finish it. So let's go to 1 hour time frame. 1 hour time frame means that each candle you are seeing is within 1 hour. This is 1 hour, 1 hour, 1 hour, 1 hour. If I should go to 4 hours time frame, that means that each candle you are seeing here is within 4 hours time frame. That everything here happens within 4 hours. See it here. This one remains 2 hours to close. Let's go to daily time frame. This is like what? This happens all within a day. All within a day. We still have 14 hours to close this for today to end, today's market to end. So this is the daily time frame. We do it in a way that you will be able to understand what the market has been saying so far. This is what a weekly time frame on gold, XAU USD. Weekly, a whole week, and today is Friday actually, right? So market is closing 14 hours time, which can still allow you to make money if you want to. So weekly time frame, and when we are doing analysis, be it fundamental or technical, you're going to need this time frame analysis, multi-time frame analysis. Yeah, I'm not actually using them for analysis today, but just to tell you how to read the stock chart, how to understand what are the movement, what happens in the market, what happens to the candle, how are they formed. Everything has time that it happens. It has time that is happening in the market. So you have to firstly understand these simple things and how they work in the market. Please subscribe to my YouTube channel. God bless you.